Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business. Joining me today is Jennifer Hunt, who is a national real estate expert. Sorry about that. National real estate expert in Canada. Thanks for joining us today, Jennifer.
Wonderful. Always a pleasure to be here and talking with you, Mario, and your listeners.
All right, super. Let's chat about the Calgary market. Now, the numbers continue to grow in terms of MLS sales in Calgary. You know, in April, I can't remember what the exact number was, but it was sky high in comparison to a year ago. May has continued on. First of all, what's driving this, Jennifer? What is driving the I hate to use the word frenzy, but in many ways, I've had one realtor describe it to me as a frenzy right now.
Mm-hmm. Yeah, and we are seeing that. And what's occurring at the moment in the market, and in Calgary market in particular, is really characteristic of a real estate cycle. And what we see with a real estate cycle is very similar to any other business cycle, where there is a boom, a slump, and a recovery. And we are, and Calgary in particular, even just about a month ago, in terms of doing the analysis, is in the beginning of a slump. And this kind of frenzy is very characteristic. And even though you might think, well, why is it a slump right now? And it's the early stages of this technical phase where there is a buying frenzy, that prices do go up. And we are seeing this in Calgary. You might be wondering, okay, why are we talking about a slump? Because we are looking ahead. We want to be looking towards the future, because it is very common for individuals to feel this fear of missing out, especially when times are as frenetic and have this frenzy. And so just being mindful that all of the data that's underneath those sort of superficial housing data, the GDP and the jobs and the population, those don't come in and affect the housing market until about 18 months to 2 years later. And since we had the pandemic impact March 2020, we are expecting the market to soften towards the end of this year and into Q1 2022.
Yeah,
so,
a couple of things of what you mentioned. First of all, about not wanting to miss out, and I talked to fairly recently a national spokesperson for one of the big real estate companies, and he mentioned that you know, especially for first-time buyers, right? They're seeing the prices rising, and you know, and they don't know like how long are the prices going to rise, how much they're going to rise by, so they're jumping in now. Is that a factor in the market?
It certainly is. And what we've also seen from the pandemic is that individuals have had time to not spend as much out in the world on other being out in the world, let's just call it that. And so they have had more savings, and we are seeing first-time home buyers coming into the market in droves that we hadn't seen before. So there's pent-up demand. There are supply constraints like crazy. So we're not expecting everything to just sort of, when I say soften as well in the future, I don't necessarily think that it's going to fall off a cliff. And there's a number of reasons for that, Mario. A couple of them being that inflation is on the rise and will continue to rise. This is a good time to be getting into real estate. Real estate is one of those inflation-proof investments, if you will. Your asset rises. If it's a rental property, your rental market will rise with inflation as well. So those are two really good reasons to be in real estate in inflationary times. The other component of this is that we've seen the fiscal stimulus and the monetary policy and the quantitative easing. In other words, all the CERBs and the SUs and the CEBAs, all of the stimulus money coming into the economy. And I call it a life jacket economy, because the GDP did drop, jobs did drop, but we've also been buoyed by this life jacket from the government. And so that's softening a lot of this and prolonging the cycle as well. Now, that also said, is that what we're also going to see with this sort of GDP and this life jacket economy is that coming into the future, we won't see it as like a dramatic precipice is what I'm getting at for that softening. And so it's a great time for individuals to get into the market and pandemic proof and inflation proof portfolios.
The interesting thing too, Jennifer, regarding this is, you know, The interest rates, right? That's a huge factor for people coming in right now.
It's a huge factor. I mean, interest rates are at all-time lows, and there's not going to be, I mean, based on all the economists and all of the banks and the Bank of Canada, it's very unlikely that interest rates are going to go up in a material way in the next couple of years. So this is also good. And then another component of Canada's GDP, and here's another, again, life jacket that's in the housing market and will for a while, is that Canada's GDP, a huge contributor of that is the housing market. And it's actually doubled in size in the last little while. And so our economy is really focused, and in certain provinces especially, is really focused on that housing market because it actually is a contributor to our GDP. And so Canada as a nation isn't going to allow real estate to falter because it's such an important part and big component of our GDP.
Okay, super. Last question I have for you, Jennifer, and you've had a lot of experience over the years in the investment side of real estate. Is this a good time to get into the market? Not if you're purchasing a home to live in, to buy and to live in, right? But is it a good time as an investor right now?
That is a very good question, Mario. And the answer is, I always believe that with the right market, the right property, the right neighborhood, and the right portfolio planning, that is always a good time to get into the market. Real estate is one of those, and I don't sell real estate, so this isn't about that, yeah. But real estate is one of those assets that over time, if you do it right, and you do it with the right intentions, and you're risk averse, and you've got your reserve funds, that over the long term, you're going to do very well. And it holds up in turbulent times the best. And actually, even one step further, not only just real estate, but multifamily assets are the most secure during turbulent times. So the answer is, do your research, absolutely. But if you've got a great neighborhood and you've done your market research, and Calgary is an awesome place to be buying real estate, and you've got it for the long haul. It doesn't matter if you're timing it at the perfect bottom or the perfect top or whatever. Just get in, hold it, rent it, and do the right things, and you'll be in good stead.
Super. Well, thanks very much for joining us again today, Jennifer.
Always a pleasure, Mario. Thank you.
All right, super. That was Jennifer Hunt, a national real estate expert in Canada. This has been this has been Business Insider with Mario Toneguzzi on YYC Business. Thanks for joining us today.